Jim, you wrote a piece on Real Money about 4 underperforming stocks that you should be in. One of them is Fitbit. Let's talk about that and some of the other names that you brought up.
James Park's been a frequent visitor of Mad Money, and James has done a couple of things that I think were very considered, but didn't jive with what Wall Street wanted. For instance, he would always give guidance that was sharply below what Wall Street was looking for. And that's part one, and that meant that everyone had to take their numbers down. And then he would beat the guidance handily, which would then be they would have to upgrade, but then immediately he would also guide it down for the next quarter. This quarter was a true blowout, very important because there were no real holidays this quarter. You could say, well, Father's Day sales, but please. But more importantly, he left the guide, he actually guided a little bit above what some people were looking for. So that whole conundrum that's existed from 50, 40, 30, 20 is now gone. He actually is in sync with what Wall Street does. And I know he doesn't play to Wall Street, but it's obvious that business is quite good. And by the way, he's really in his sector. I think people are starting to realize that Apple is not playing in his sector. Apple would tell you the same thing.